Perfect. So with the spring enrollment, I'll get to your questions, etc. as well, Abby, afterwards. And we'll quickly go over the spring enrollment right here before I dive into the other questions. I wanted to go over the dollar right here. And to me, it's quite fun. It's also quite confusing right here, the dollar, to see what it's actually doing. Now, if we take a look at the weekly, then we discussed this weekly fair value gap right there in itself. The first thought process I would have is that it's most likely not going to hold. If it's going to hold, then we'll have a deeper retracement into that to then continue lower. And the reason for that, the reason why I want to know that is because I want to avoid those losses before I take the next winner. So I want to essentially get more confirmation. I want to be more accurate in that sense. So right here, if we go into the 4 hour, we will see we have a 4 hour value gap lower right there, which we can potentially continue lower from. So where do we actually look to short this 4 hour value gap if we are looking for trade IDs? And when do we stop using that 4 hour value gap? Because in itself, it's quite a big 4 hour value gap right there. Then let's first look at the daily as well. Daily, we have daily value gaps higher right there, daily value gaps higher right there. At first instance, I was not expecting personally a big rejection right there of that daily value gap, which we do have right now. So where my thought process here is, we have this 4 hour value gap, which the first thing into it is already a nice rejection to potentially continue lower off of that. So we have a nice rejection right there, which we can potentially continue lower, ideally failing to create a fair value gap right there. So we can actually look to continue lower as well, having more confidence that it actually wants to continue lower. Now, if that does not happen and the next candle right here is not even showing bearish signs currently in the first 2 hours of the 4 hour candle, and is only being an up candle, then this in itself to me looks like we might create a 4 hour value gap right there, going into another 4 hour value gap right there, almost failing the rejection, not creating a daily value gap lower right there, which leads me to think again, well, does it then want to continue higher actually? It's a little bit 50-50 in my opinion right there, but that's a good thought process right here where I would not look at shorts anymore right here, but also not necessarily look at longs, where if I want to look at longs, then I want to wait for ideally another sting into it to then continue higher off of that. For me, until that time, I am happy with staying out of the market. Now, this also, what we did not touch on just yet in the fair value gap video, I felt like it wasn't really the right time to touch on that, is whenever we have fair value gaps just one-sided, that does not mean that there's actual intention towards that side. So what I mean by that is, if we have fair value gaps like this going lower, then that does not actually mean we want to continue lower. Yes, the rejection, of course, is extremely aggressive and is the first sign that we might actually want to continue lower, but it's not a definite conclusion that we do want to continue lower. It's not decided yet. And the reason that is because fair value gaps in itself are also used as manipulation. And manipulation is just intention. It's fake intention in a sense. So right here, we have fake intention going lower potentially to then continue higher. Now, how can we actually see that that's fake intention? Well, whenever we have been bullish, like we have right there, and we have established 4 hour order flow going higher right there, and we just have a singular move lower in form of that huge fair value gap lower right there, then yes, we have intention going lower, but we never have order flow confirmed going lower. So before that time, all this time, 4 hour order flow was still bullish. So that also leads me to think, all right, well, this becomes suspicious that might be then fake intention to actually continue higher instead. Because if we truly had that much bearish intention, in my opinion, we should have already continued lower immediately off of this 4 hour value gap right there. There's no real reason to mess around right there. We should have already continued lower if there was a true intention to continue lower as well, in my opinion. And if there was a lot of momentum. So that's important to understand. And we'll see that as well on pairs like EU right here, which are coming into, or GU is actually a better example. GU right here coming into that order block right there with the value gap that has not been traded into. So this move higher right there, even though we could argue order flow has been confirmed right there, not the nicest price action, but just a singular move higher with fair value gaps right there, just with the intention, does not necessarily mean that we are actually going to continue higher. Where if we take a look at this price action, again, that worries me right here that we might actually want to continue lower. It worries me is an exaggeration because I don't really care. But right here, if we want to continue lower, then this is looking nice to actually continue lower, where we have played the rejection of that weekly order block and weekly value gap to then move lower instead. So, which also makes sense if we now, again, take the fair value story, because the fair value area was sitting right there, and we are clearly not offering fair value anymore. So the only real area, if we do still want to continue higher, was the weekly order block right there. Fails to create a daily value gap higher right now, whilst trading back into that first candle. So in itself, this is looking great for bearish price action overall. For EU, very similar. For EU, we have a little bit more resistance coming up. And what I mean by that, if we now want to continue lower right here, then which one do we want to pick? Do we want to trade EU? Do we want to trade GU right there? Personally, I would look at GU. And the reason for GU, even though overall it has been stronger, it is not creating a lot of resistance going against it. Meaning, we already came into the weekly value gap, weekly order block, similar to EU already came into the weekly value gap as well. But the difference between EU and GU right here is if these daily candle closes, then we have this daily fair value gap going against it, where GU doesn't have that. So whenever you want to trade, or you're sort of doubting which pair you should be trading, the weaker or stronger one, etc., find the one with the least resistance. The one you want to trade is the one with the least resistance, which oftentimes is referred in the SMC industry, community, whatever you want to call it, is a relative strength analysis. It doesn't have to be that complicated where you have to look at, all right, which one is actually stronger, which one is weaker. No, find the one with less PD arrays, opposing PD arrays going against your trade ID. So here GU has less discount arrays going against the trade ID of taking shorts, where EU is now having already this fair value gap, which then on the 4 hour, we could also create a valid breaker right there. So there's a lot more discount arrays going against us if we now want to look for a short ID right there. So I would prefer GU myself. Looking at some other pairs right here as well, ES has been quite interesting. ES clearly for now at least running this high. We will see what we will do as well with that area. But for now, this is definitely a run on liquidity and not a sweep of liquidity. So potentially we can also continue higher unless we again have a lot of resistance, create a sharp turn, create a lot of momentum going against that. Then I would not expect the fair value area to hold right there. And what I mean by that is if we now create a fair value gap going lower, we respect that to then create a new fair value gap going lower into the fair value area. There's a lot of resistance going against it, right? There's a lot of strong resistance for that fair value area than to suddenly hold. So I would expect lower prices almost as well. But we'll see how we react there. NASDAQ as well, quite interesting. Let me delete everything. Let me just mark out that line right there. So right here, if we do want to continue higher, then we are quite close to the drawn liquidity. So at 9:30, I'm not expecting a huge retracement to continue higher off that. Potentially the 1 hour value gap right there to already continue higher right there. Which again leaves all the other fair value gaps that we have right here on the 4 hour for me currently, unless we have a huge retracement first, I would still be bullish, but my preference would go out to the 1 hour value gap first to continue higher off of that instead. And that is again being more accurate with which fair value gaps are actually relevant, because a lot of people see fair value gaps and they're not sure which one to choose. They might even have this fair value gap still marked up right there. Whilst this fair value gap has zero relevance to me. It's the least relevant fair value gap on this chart right here. I'm not looking to trade off of that, currently not looking to target that. It's not relevant right there. So even though we might have a lag higher, an order flow lag higher in form of this, a lot of fair value gaps in that particular order flow lag are not even relevant. We're not even looking to trade off of that. So that's quite important to understand as well. So if you do have any questions about the spring enrollment in particular, then please feel free to let me know. And if not, then we will move on to the advanced live section as well. Let's see. All right, so can you explain a bit again, which you did now about not relevant? It's a good question. And if we, so when we have a target, and that's where it all starts with. Oftentimes, if I tell you, it's very funny actually. I have a YouTube video coming up, And in that YouTube video, I also talk about the third candle in similar style that I've been talking about in the spring enrollment. But certain details are more important than others because it all starts with a sort of process. And if you do not know the target, then knowing what a fair value gap will most likely do is completely irrelevant. So you first need to know the exact target to know what a fair value gap will also most likely do. So for example, if we look at EU right here, and we have this target right there, that was our potential target. Then if we now want to continue higher and we have a lot of momentum going higher, then the fair value gaps that are actually relevant is this fair value gap that is higher right there, the highest fair value gap, this fair value gap right there. And after that, everything below this overlapping defense is not relevant. So daily fair value gap right there is already a huge retracement it is going to make before it continues higher. 4-hour value gap we have below that right there is also not relevant. And what I mean with not relevant is we are not expecting a retracement into that before we actually continue higher. So that is where the third candle now comes in. That is where understanding how far we can retrace, fair value area, etc. comes in. So if we have a fair value area, and let me find another example as well. Let's see, Australian dollar, US dollar. Let's see. Let me see if I can just find a clear example. I want to find a clear example. Well, I can use crude oil again, right here. Yeah. So for crude oil, this was a beautiful example, to be honest. Right here, we create a fair value area, which we come above, right there. So in that fair value area, we also have right now an order flow lag higher right there with a lot of fair value gaps. So what are the actual fair value gaps we are most likely going to trade off of? As a general rule of thumb, and I'm going to say this extremely general, so please take that not as a fact or as end all be all. It's just an extremely general rule of thumb. The first two fair value gaps are the most relevant one. And what I mean by that is we likely have one fair value gap that's not overlapping with a fair value area, with an overlapping defense. That one is relevant because we need to see how we react off of that if we already want to continue higher. Then the second one is most likely going to be overlapping with a fair value area or with an overlapping defense. Every other fair value gap below that or besides that is not relevant. It's just not what we are looking to trade off of. So if we expect higher prices, it's either going to be the first fair value gap alone right there, or it's going to be the part where the fair value gap and this small one right there that is close towards the fair value area right there that we can actually continue higher off of. All the fair value gaps below that are not relevant, and not relevant as in I am not looking to trade off of them. So eventually they can become nice targets because if we're not offering fair value right there and we will look to target these lows, then these fair value gaps are going to act as resistance where we can have somewhat of a retracement right there a little bit to then continue lower. So that is where they do become relevant more as target, but not as something to trade off of, if that makes sense. Let's see. If you have a daily expansion candle on the formation and inside the daily candle with a 4-hour value gap, would you still use the 4-hour value gap to trade off of? Trade off, for example, on Australian dollar, Canadian dollar. Yeah, it's a good question. Good question. And I believe I understand what you mean. So when we have a daily value gap in the making, right there, essentially, we have this daily value gap right there in the making, understanding that the value gaps, ideally, we want them always to be in context. So this is a tricky third candle where we're not sure if this will continue higher off 4-hour value gap instead, or if it will come back into the daily value gap to then continue higher off of that. So that makes it tricky. And right here, for me, currently, I would argue, all right, I'm not looking at the 4-hour value gap anymore. I would want to see daily value gap right there holding and to trade off of that instead. Now, the reason I say that is because if we have a situation like this, we again need to determine how far can we actually retrace before we say, all right, let's just stop and let's just wait for the daily value gap instead. So right here, I would only want to see that first candle. And if we do not get an immediate rejection higher off that first candle right there, I would not want to trade this. So if we fail to continue lower, and once the next candle failed to continue higher, and if we now start to create that next 4-hour candle going lower, then if there was an entry right here, do we have a sharp turn lower? I don't believe we have. If we had a sharp turn plus re right there, then that would be the entry for me. But after that, I would immediately stop looking at an entry as well. So almost requiring perfect price action to immediately go higher. If that does not happen, I do not want to get involved, and I would want to wait for the daily fair value gap instead, if that makes sense. Australian dollar, Canadian dollar. Excuse me. But a similar scenario. I hope the Australian dollar, US dollar also makes sense. You also said Australian dollar, Canadian dollar. I just read it wrong. My bad. Let's see. So here we have the daily expansion, and we are not creating the daily fair value gap just yet right there. So in this case, it's a little bit different. We just have to take into account how much time we have left to actually continue higher. So right here, since we are still in expansion phase, it becomes overall quite similar. It's just a little bit earlier in the duration of a daily fair value gap is going to be created. So right here, this 4-hour value gap is also something I would look to trade off of right there to then continue higher, to continue that bullish, that lot of momentum going higher right there. If we do not automatically or we do not instantly continue higher off that, I would again personally want to wait with the time aspect as well to then wait for a daily fair value gap instead right there. So again, requiring that perfect price action right there, already continue higher, if that makes sense. Let's see. Let me see. Where was I? It's here. If we have an overlapping defense with fair value gap, which is the only relevant, but the retracement is forming a fair value gap in higher time frame, still that fair value gap is irrelevant, which is on the higher time frame. Sure, thank you. If we have an overlapping defense with fair value gap, which is the only relevant, but the retracement is forming a fair value gap in higher time frame. Yeah, the higher time fair value gap in that sense would be the relevant one, if that makes sense. If that makes sense. For the daily, Australian dollar, US dollar can be said that price gave signs of sweeping the fair value area on March 8th, and on March 19th is respecting nest or lock, meaning is respecting nest fair value at this moment, correct? Yes, exactly. So that makes it also quite difficult right here, since whatever the dollar is doing and why we are seeing this huge rejection going lower. So like you mentioned, we are indeed disrespecting that fair value area right there to then come into the nest area. Where personally, I was not really expecting higher prices off of that. I would rather see lower prices instead. But we are just seeing a huge move higher. Now, at this moment in time, it's important to understand whatever the dollar will do, that will be the most relevant thing. So if the dollar will want to continue higher right here, and will want to take out those highs, like it might be doing at this moment in time, it would not surprise me. But it would also not surprise me if it continue lower. So it's quite 50-50 at this moment in time for me. Australian dollar, US dollar would then most likely see a huge move lower again and just continuing lower towards the fair value area lows right there. We just have to react right here if we do indeed want to continue higher off that nested order block right there. That becomes quite important. So quite 50-50, but you are correct indeed. Do you think we can recognize fake tops and fake bottoms, intermediate to high, intermediate to low, based on 2-candle rejection? That's an interesting one. Potentially yes. Potentially yes. We have to dive deeper into that as well in the advanced section. That could be very interesting, for sure. Let's see. In regards to Euro New Zealand dollar, we sweep the previous day high before coming into the daily bullish PD rate to trade from. Is it dangerous in general taking previous day high or previous day low before coming into to a high time PD rate? Is it dangerous? I would prefer if it didn't do it, because there's a chance to create momentum right there. That's also why Euro New Zealand dollar right there is not something I necessarily liked. And just because of the momentum we had going into the daily value gap. So personally, I did not prefer that. I don't prefer that. So generally speaking, is it dangerous? It's more dangerous than having it not do it. As in, if we don't sweep that previous day high before coming into that, it's less dangerous. So I would rather see that. Can we still look to trade it? For sure. Again, that would lead me to say, all right, I would want a little bit more confirmation. I want to make sure it wants to continue higher, etc. Things like that. So overall, it is more dangerous in my opinion. Yes. Let's see here. I'm overwhelmed now. I watch a video of yours and think the penny has dropped, but then the disillusion comes in. I just watched your dealing ratio video again. Which kill zones apply now? When is it time to trade? I always look for an entry on New York AM and then exit on New York PM, because that's what you say in the video with the session indicator. Am I completely wrong now? In which kill zones do I have to or should I trade? It really depends on what your personal preference in that sense is. So I'll start off with that, as in which kill zones are you looking to trade? Now the kill zones you have are still perfect. I just simplified it a little bit more, where you can trade from, if we're looking at indices, which is New York AM and New York PM, then New York AM will be from 9:30 until 11. You can take 11, you can take 1, but it's from 11 a.m. New York local time. Then you have New York PM, which is 1 p.m. till 4 p.m. New York local time again. So those are defined, but if there's an entry opportunity presenting itself in between 9:30 a.m. New York local time and 4 p.m., or I would argue 3 p.m. because the last hour your trade still wants to run, 3 p.m. New York local time, that is still perfectly fine to trade. So I might have been a little bit confusing regarding that. So because I've tried to simplify it a little bit more, because you don't need to know the exact specific sessions, etc. That's not super relevant, but you're still correct. You're still doing it perfectly fine. If you want to trade in, or if you look for an entry in New York AM and want to exit New York PM, that's perfectly fine. There's nothing wrong with that. That's absolutely perfect. Absolutely perfect. Let's see. So this is like the pushing hands concept, correct? Less resistance shouldn't have a deep retracement. Exactly. I'm not sure which one I was looking at exactly at that moment in time you said that, but yes. Let's see. Can you go over Australian dollar, New Zealand dollar? For sure. Let me save that one actually. Wait, let me save that one actually for the advanced section. I'll go over it immediately. Let me see. All right.